Welcome back to another edition of LFG. Liane, did we ever talk about what LFG stands for?
I don't know that we have talked about it.
Oh, I think we came up with, or no, I think you came up with, did you come up with LFG?
Well, I personally didn't come up with LFG.
No, I mean our LFG lets something grow, GROW, and it's not the F word.
It is the F word. It's franchising.
Woohoo! Okay. Anyways, hey guys, welcome back to another edition of the LFG podcast. Michael Hyam, here with co-host. Jump in, Liane.
Liane Caruso.
With Liane Caruso, you all know her. We are super excited today. We have Sam Phelps, Director of Development and Valuation Services at Tenet Financial Group.
Yes.
Super
Very
excited to have Sam on.
Yeah, Sam, we've actually recorded that segment, and Sam, we sent him some rapid fire questions from other franchisors. We reached out to our franchise friends and family, like some emerging brands and some more established brands, and shot him some questions. And that dude is so smart, and he had a lot of great information to share. So if you have any financial questions about financial lending and for your franchisees and for your franchise brand, please keep listening. It's really good.
Sam was fantastic. He always is. And it was great having him on. But before we get to Sam, let's get to it, to the news, which is what's going on. I think we mentioned it on the last episode, but this segment is called What's Growing On. This segment is sponsored by Franchise Assembly, a franchise events company bringing resources and education to franchise brands and people. It's actually a really awesome company. I mean, I don't know too much about it, but it's pretty cool. So what's growing on? It's the latest events, news stories, all that kind of good stuff. Liane, anything growing on?
Yeah, there's lots going on. And first up, I've got two things from our friends over at Franchise Business Review. Everybody knows Franchise Business Review. They recently announced the 2024 low-cost franchise opportunities, which were ranked by 11,000 franchise owners across more than 140 leading franchise brands. It's pretty big. And you know we love our lists. All brands on the list have an investment level starting under 100,000. Many can be started with financing for as little as 15 to 20K. And I think, Michael, you know more than anybody with your events, how many franchise prospects and candidates are looking for low-cost entries. So this is a great resource to be able to look into people who are looking for a low-cost franchise opportunity. So also speaking of FBR, May 31st is the deadline to participate in the Franchising at Work Employee Feedback Research and Awards. So this is for franchisors, franchisees, franchise suppliers. Everybody's invited to participate and let their employees share what makes their company a great place to work. Since the workplace has been completely redefined and reimagined over the last few years, as we all know, the franchise companies that embrace change, prioritize employee well-being, and foster a positive culture deserve to be acknowledged. So make sure that your company is now is acknowledged in the Franchising at Work Awards and see how your employees really feel about you. Go to FBR's website to learn more about both.
Did you have a chance by any chance to look up, or do you know? If you don't know, it's okay. Who won top award last year?
I don't know that information, but thanks for putting me on the spot. Do you?
I'm just kidding. Maybe we should have Michelle on here at some point,
Oh,
and
that's a good idea.
we can
We all
ask
love
her.
Michelle.
Hi, Michelle.
Hi, Michelle.
Um, Liane, tell us about the quilt project.
Yes, the FF Quilt project is underway. For those of you who are on LinkedIn regularly, I'm sure you've seen something about this and hopefully you're already participating. But this project was launched to support the sense of togetherness within our franchise community. The quilt will embark on a journey across participating brands for signatures, admiration, and igniting the spirit of camaraderie. So message Madeline Zook, she was on our episode last week, to claim your square. You need to mail in your shirt, patch, or swag by May 31st. And we've already submitted ours, and shirt is on its way, Maddie.
So, did we get one square, or we got two squares, or three?
Whoa. We only got one, but perhaps we should get 2 or 3.
Yes.
I
There
know
you go.
people. I'll ask her.
All right.
I'll claim our
Fantastic.
spot.
um, so here's an interesting article that came up on Franchise Insights about sales, and me being in sales, I found this one to be really interesting. And this, of course, is for all franchisors. Listen up, because it involves your franchisee prospects. So franchisee prospects consistently indicate a preferred sequence for being contacted after requesting more information: email, text, and then phone call. They say that half of the prospects are either unlikely or very unlikely to accept a phone call from a franchise representative with whom they have not first exchanged an email or a text. Prospects want to acquire more general knowledge about your franchise and set up a mutually convenient time before calling or taking a phone call. Emailing first, of course, provides a little bit of an introduction, a little bit more on who you are and about the company, so on and so forth. And I found that to be very insightful. Of course, I'm in sales myself, and I actually email everyone first. No, that's not true. I call people and email people, but that's great. It's good to know. Um, so if you have any awesome news of what's growing on, please feel free to share it, because Liane and I are going to be here for a long time, every 2 weeks, in your Spotify. And we need your news. So please feel free to share it. Send us an email to podcast@franchiseassembly.com.
Hey, who named these segments? Okay, next one. Franchise Royals. This is something cool that we noticed on LinkedIn. So, for anybody who knows Michael and I, that we are regularly on LinkedIn, possibly obsessively, but
Noticed on LinkedIn. I thought it was because we bought franchiseroyals.com.
well, we have that too.
If anyone wants to buy franchiseroyals.com, I know someone that's selling it for like $30,000. Just kidding.
But basically what this one is about is we just noticed great things that are happening in the franchise community, either from brands or people. And so we just wanted to give a virtual high five to those people and brands. But this segment is sponsored by Hello Mastermind, a professional development peer advisory group for franchise professionals and executives. We currently have executive franchise marketers and franchise development execs with just a few spots left. Visit hello-mastermind.com for more info. How'd I do?
Fantastic. I even know the person that runs that Hello Mastermind. They're the pretty brilliant individual.
This is one giant commercial. Okay, here we go.
All right. So who's your royal then of the week, Liane?
My royal of the week is our good friend and supporter, Belle White. She has launched Belle White Creative, and I'm so very excited for her. She has launched a business focusing on websites, content, SEO. Many of you know her also from LinkedIn. She is, I've worked with her before in a couple of ways. She is a unicorn if you do not know her. And just a quick shout out, she is supporting us with this podcast. She built our Franchise Assembly website. She helped us with the Hello Mastermind website. So definitely, she's such a great resource and an absolute delight to work with. And congratulations, Belle White. I can't wait to see how this business grows.
Congrats, Belle. Thanks for everything, by the way.
Yes.
Fantastic. And my franchise royal of the week is Kelly Morgan. If you don't know her, Kelly owns an emerging brand called Morgane's Fitness. We were chatting a bit earlier this week. She told me she was bummed because she spent tens of thousands of dollars on becoming a franchise, on her FDD, on the manuals, and so on and so forth. And because of some bad advice, and choosing the wrong company, unfortunately, it looks like she's got to start from scratch and start all over again. She was really bummed. Anyways, we had a nice little pep talk chat. And it was just really inspiring to me that even after all that and spending all that money, and thankfully the 3 locations she has are going very, very well. And she was still so gung-ho into wanting to franchise and bring on franchisees, and it was really inspiring. So go, Kelly.
Awesome. Congratulations, Kelly. Good attitude. That'll get you everywhere. All right. That's good for Franchise Royals. Those are our queens and queen of the episode.
Our queens.
That is our queens of the episode. So before we bring Sam from Tenet Financial Group to our show and tell, here's a quick ad from Tenet Financial Group.
Unlock your franchising potential with Tenet Financial, where they treat you individually, crafting tailor funding packages to suit your unique situation. They are here to fund your franchise so you can focus on growing your dreams. From their innovative Rob's 401k funding to SBA loans, leasing, and a range of other loan products, they are your partner in successfully funding your franchise. Visit tenantfinancialgroup.com today and experience the difference. Tenet Financial Group, your trusted partner where franchise funding is simple, transparent, and honest.
Okay, welcome back. We are ready to start our show and tell segment. This segment is where we bring one of our franchise friends who is smart in some particular area. And so this time we brought Sam Phelps from Tenet Financial, and super excited to have you, Sam. Thanks for coming.
Hey, glad to be here.
Sure. So show and tell is basically an opportunity for you to tell us all the things you got. So you're in this day to day. You're the finance guy, the bank, the lender, all of the things. And so I know so many people have questions about financial lending and how to support their franchisees or potential franchisees. So we wanted to bring you on and kind of rapid fire some questions. We reached out to some of our franchisor friends and asked them to ask us questions that they wanted to know, some burning questions. And so we've got a bunch for you. So are you ready?
Ready as I'll ever be.
All right.
Great. All right. So Sam Phelps, for those of you that don't know Sam, you should. Sam Phelps is the Director of Development for Tenet Financial Group. In his role, Sam focuses on the sales and lending teams at the company. With over a decade of experience in commercial and SBA lending, Sam has developed an exceptional understanding of the small business industry, and has a strong track record of advocating for his clients, utilizing his expertise to structure and implement practical financial options. Sam's educational background includes a degree in economics and finance from the University of Missouri and a Master of Finance from Georgetown University. All right, Sam, we're going to jump in with our first question here. And Liane, who's this question from?
This question, Michael, is from Chris in Connecticut.
Chris in Connecticut. Okay. Chris in Connecticut, if you're listening. Actually, this is kind of funny. So all of these, as Liane had mentioned, are questions from actual franchisors. So I doubt Liane is going to name all of them. But if you happen to know a Chris in Connecticut and that's a franchisor, you might know who this question's coming from. All right, Sam. What is the real impact of SBA no longer maintaining the franchise registry? They're still supporting SBA lending. It seems like nothing has changed. Is that accurate?
There's some nuances to it, but yeah, I think that's a good way to put it, Michael. Franchise lending with SBA was going on long before there was a directory. The directory was nice because it was kind of your cheat sheet on the legality of how the FDD was put together, if there was any addendums, amendments you needed to add when you were closing an SBA loan. But quite frankly, the SBA is set up for franchise lending. We did a lot of SBA loans at the previous bank I was at that were franchise loans and pre-registry. And so, groups like FranData do a good job of, once you get to, maybe the higher project costs, the higher cost points, franchises, banks might lean to that to just have a second set of eyes on the legality. But the good thing about it is there's a lot of good banks that are experienced in franchise lending. And so they just pivoted to make sure they document their files with SBA. But in general, we've not seen a slowdown as far as SBA lending with franchises.
That's great. Good to hear. Okay, this is also from Chris in Connecticut. He had some feelings. We understand credit scores and financial strength, like how much money you have in your bank account. But what are the other factors that banks are considering when they're looking at potential franchises for funding?
Great question, because that's always something to answer like this. We know the rules for the SBA loan program. You've got to have X amount of money that you can put down. A lot of banks will look to see if you have little extra cash, just what we call pocket money, walking around money, so you don't have to dip into the business. That always helps. But really, your financial strength comes from, do you have a job outside of franchising? We have a lot of husband, wife, partners that come in, and if you have one of those individuals that's keeping their job, and that'll support your lifestyle, that'll support, your car payment, your house payment. Maybe you finance that big screen TV and you can support that with that other job. That's great. What that does for the bank is they understand that, if you hit a bump in the road with the business, or the business takes a little while longer to, hit that critical point where you're starting to really perform, that it won't put the business at risk. You've always heard the saying with banks, cash is king. It's all about cash flow. And so that is just a big one, is if you have one of those outside incomes or outside liquidity that can be your backstop, banks look at that. It really varies bank by bank too. I know we've had that discussion between us. Not all banks are equal. Some of them look at it a different way. Some of them are more aggressive in the area they are geographically, or they've had great success with this type of industry or brand. So always understand that when you're going to a bank, you're going to have to tell them what your personal financial situation is, and anytime you have something that may be a little bit of drag on you, they'll ask questions about it. But if you can provide them with something as far as documentation or outside cash flow, it comes in handy.
Cool. And so, are there what are like deal killers that a bank can't overcome?
Oh gosh, always the tough conversations in our industry. Really comes down to, if you have something, particularly either a bankruptcy or a foreclosure that's recent. I will say this: everybody in this industry knows, what happened, 15 years ago in the financial crisis, and people had to make some decisions. And so there are ways to work around that. We actually had one yesterday. Liane, I told you I had a couple war stories. We had an individual that, did have that situation during, the Great Recession, and had to, walk away from their home, but we provided documentation to the bank, and made sure we got that taken care of. But other things are, criminal history is big. They talk about the C's of credit. Character is the highest one. If that person has something that could be, working against them, either, a felony or something where they have a crime that, particularly financial crimes, where it could jeopardize, what they think the character of the person, that's always going to be a big one. Other deal killers, it's like you go on a car lot and you're looking at all these different cars, based on your income and based on, your financial position. You may not be able to buy the Maserati, but you can buy an awesome souped up, Forerunner that, will serve your purposes. So sometimes deal killers are just, you're not going to qualify for a higher, franchise, but, there's so many. It's like I tell people, in the franchise world, it's kind of like Baskin Robbins. You go in, there's all kinds of flavors of ice cream. You just got to find the one that works for you, and package that with a funding that makes sense as well.
Is there still a like 7-year time period between bankruptcy or foreclosure?
Good question. Depends on the bankruptcy.
Mm-hmm.
Chapter 11, 7 years, and Chapter 7 is 10 years. And when you get into the legality of that, and full disclosure, I am not an attorney. Please seek your legal advice with your outside counsel. But the banks look at that time period and that look back, and generally that's when it's reported on your credit report. But also, again, situations surrounding that, bankruptcy are, highly relevant. We see sometimes when separation of spouses, or, I was a minority owner in a business where I didn't make the decisions and I had to protect myself. And, you've got a good lender, got somebody that understands financing they're going to work with you on things. Can't promise that you'll get the deal done, but definitely, what we say around here is getting the details so we can work the problem.
That's great. Thank you for all that. All right, here's another question. Why do lenders always cite the franchisee's business as being a startup, which is more risky, but then ask for the historical financial representations of the brand, like other units and so on?
Ooh, great question. So we're gonna look at this two parts here. So anytime you're looking at a new franchise, a new business, it is a startup. And what that means, if we look at it just in that vacuum of this deal, there's no historical income, there's no historical information on this particular business, this person, this entity, this location. But part of what the lender does, and a lot of times it's a good lender that asks questions like this, it's getting the history of like performance from like companies so they can build the case of how this will work. One of the biggest things I can tell, our franchise friends out there, always be willing to put together objective data to make your case for this location. And so that's what's awesome about franchising. So the brands we work with that really perform well provide that information to their franchisees. They work with us on their projections, but anytime there's a question from the bank, we can usually point to a number that was supplied, by either a performing location within that brand or industry data that is readily available for that type of concept. And so really, to answer the question, yes, it is a startup because it's new. It's mitigated. The risk is mitigated because you have a proven concept, which is franchising. But we need to put, some numbers behind that to show really, end of the day, show how this loan's going to get paid back. And, that information from historical performance of other locations, other, brand franchisees goes a long way. Great question.
That's good. So are all franchises viewed the same? Like brand A compared to brand B when it comes to the banks? Do they obviously they know the differences between the different brands, and are they viewed differently?
Yes and no. I mean, like you said, Michael, and I think we've had this conversation. Franchise is awesome for people that come in, they know they want to own a business, but they don't necessarily know where to start. So they get these proven concepts, and that's what starts to get a bank going, oh, okay, I can see this person, operating this because we have all the support system that's set up. Where brands start to diverge and where lenders and, whoever your financing partner will look different is one, brand performance. One of the things that we all know is reported on FDD or the FDD is how many new locations did you have last year? How many terminations? How many transfers? The rule of thumb with SBA lending is when you get above that 10% closure, and that could be non-renewals and terminations, that's when they start to ask questions of what's going on, because it's a perceived risk trigger that maybe there's something going on that could be systemic to this maybe it's just the industry. We saw a lot of that with COVID, and how could we have prepared for any of that? We couldn't. But they ask questions there. Also, what your brand is financing, does get looked at, particularly in SBA. It's where are the funds coming from and what are they being used for, and there's pluses and minuses to that. A lot of times on our service-based franchises, a lot of that is a working capital loan, which can be a little riskier, but again, the loan amounts are much smaller than some of the other brands that, particularly when you get into real estate, that's when things get looked at a little more closely because there's a lot of moving pieces to it. So make sure you have a good funding partner, but also know that you're going to have to go through a few more hoops to provide documentation there.
Okay, very good. So our next question is, given the high rate environment, what are good alternatives or funding combinations to help ease the pain of high interest rates? And we all know, Nobody likes to pay high interest.
Yeah, it's been pretty astounding, where we've gotten to, here the last couple of years. But one of the things we do at Tenet, shameless plug right now is, you can always look at the 401k Rob's rollover. There are risks associated with that. We're real big on people making intelligent decisions. We give you all the information, talking through the pluses and minuses, and it's great if you can do a rollover and you have that, reserve that you can dip into. But at the same time, it's putting your own money up, and there is a risk if things do not go well there. Leasing is always a good option. We do have some leasing partners. A lot of times, it turns out that leasing is about the same as a loan, payment. So it's kind of six of one, half dozen of the other. But in general, yeah, really, really seen increase in the ROBs last year, Michael. I think we talked about it with, kind of what we saw in our pipeline and, from the franchise show and things like that. And it was a lot of folks with, where the economy is and their, 401k wasn't performing. So they decide to bet on themselves. And, we've got a couple of good stories there of folks that have been successful doing that.
That's awesome. So we actually got this question a couple times in a couple different formats, but it's geared towards brick and mortar, also restaurants, but generally a space. Seems to be a lot of frustration out there. So when lenders typically require a lease, a contractor contract, and in some cases some design plans before they commit to a loan. So why don't lending departments seem to understand that the candidate needs to know if they will be funded before they engage in all of that? So it kind of feels like chicken before the egg type stuff. So no one is going to sign a lease and commission architectural designs only to find out that they've been denied funding. Thoughts?
Yeah, that's a tough one, and it's all about communication. What I hear in that question, and it's absolutely something that you need to have somebody who's gone through this before. You should absolutely not be what we call going hard on your money for anything until you have that approval. And what I mean by that, there's ways to structure the deal in which you can protect that person from making a commitment until they have that commitment from the bank. And one of those is LOIs. LOIs, letter of intent, with a defined period for your financing to basically back out. And, particularly in the retail space, a lot of times, you brought that up, Liane, restaurants are a big one because you've got to get your ducks in a row. Do an LOI. If you've got somebody you're working with that understands the nuance to franchising, understands the nuance to, what the project is for the restaurant, you should be able to do, a 30 to 45 day LOI with a financing contingency there. And, sometimes people do the full lease though, but if you have a financing contingency there, it protects the person in case that financing falls out. You can then, walk away. It's kind of like when you buy a home and you have the option period to do your inspection. The financing contingency allows you to go through the financing process. And if you get that commitment, then you can start to proceed with the lease. And, as far as what you said, documentation from, builders, construction, banks can always work off a bid. The formal contracting process should not, unless the client insists on it, should not begin until you have a commitment with that bank. And then that's when you start to, match your dollars to what that bid is and, define it in a legal instrument that is the contract.
Great. This next question is a great question for sure, because sure everyone wants to know this with a timely fashion of loans taking a long time. Actually, Liane, who this question I'm about to say, who suggested it? A name, maybe? Oh, I think you muted yourself
Sorry,
there.
I was muted. Yeah, sorry. Yes, this question is from Rachel from Tampa.
Okay, great question, Rachel. How can lenders speed up the process? Time is everything, and most loans take 90 days to process. That seems like a long time for someone trying to start. a business that already has a blueprint and can just go, and obviously trying to close the deal, waiting 90 days. I mean, you've just waited that 14-day period, and now you're, any suggestions on that one?
Rachel, thank you for your question. It's a very, very good question. And the biggest thing, and I can take off my banker hat now. As I say, Michael, I'm a recovering banker. I'm now in the franchise world. I'm no longer the banker. Um, you've got to understand where the bank's coming from. The biggest thing is they look for where the deal could fall apart and where their exposure is. And so my answer to that is there's never a time that's too early to get started working with either funding partner, bank, someone that's going to keep you accountable on what you can do to improve the process. My answer to that is let's start at the end and think of all the things you need in order to close that loan. What I always tell folks when we're getting started, get started on your life insurance. We know that's going to be a 30-day process. You don't have to wait on that, nor do you have to make a payment on that life insurance policy. And you can start that early. Also, get your bids in. We just talked about that early from your contractor. If particularly, and I think this is kind of like our last question, when you have a construction component, you're going to have to basically be what we call permit ready. And that means, the plans have been approved by the city. You've got the full scope of your project and you're ready to go. The worst thing you could have is to, be waiting on approval from the city. So if you have your blueprints, get them into the city. Those need to be ready to go, because what happens with the bank is they're wanting to make sure there's no gotchas from the city. And I will tell you, anybody who has done construction lending, you have that inspector that's going to come out, and you don't want that to be a situation where things need to be changed, or, you had your contractor, submit your bid and you found out he underestimated what it was going to cost to put a grease trap in for a restaurant. Those are the things that you can get out of the way early. And unfortunately, those are usually things that banks aren't going to bend on because they've been in a situation and somewhere somebody did that, and all of a sudden something popped up and it cost more money for the bank or the person, the franchisee. And so what we do with our folks is, start working on things you can. Life insurance, your business insurance, get your plans into the city, do the things ahead of time. And they're things that you don't necessarily have to commit on, but can save you time at the end. So, you can be working on all these things together while you're seeking approval. Good question.
Well, thanks. Well, thanks, Rachel.
I think I know which Rachel that is, actually.
You know which Rachel? I know which Rachel it is. So is there a less cumbersome way to borrow money than the SBA? Because even if you're starting to think about a second location, having to go through all of that again, are there other options as you start to think of other things?
Always the $1 million question or more in some instances. SBA is great because generally what it does is it offers an extended period of time for the borrower to pay back. You go into a commercial deal, particularly on startups and inventory, working capital type loans, you're looking at a 3 to 5 year loan max. And usually they want somebody that has very strong personal financial statement or, strong industry experience. The franchise industry and franchising bridges that gap, but everybody, understands the nuances to SBA, and it always seems like we can go faster. And I don't necessarily disagree. What I would say is on the second location, you do have more options. One, you have a process that's, hopefully proven at that point. You've got the first one up and cash flowing and it's going well, and you're looking really to expand. And so, kind of to go back to the previous question about startup, you're no longer a startup. A lot of that information that you have is, it's data for the banker. And so you're just building off that data and you don't have to go through, a lot of the brain damage that you did the first go round because you've been keeping your banker up to speed on that. And secondly, you're really just you should have an understanding of the process too. I will always say, SBA is going to be a great option for most small business borrowers based on the structure of the loan. And it's partly why we put up with how long it takes and the rigorous documentation. Now, if you get into a point where you really are a strong multi-unit performer, that bank's probably going to grow with you commercially, and there are benefits to that, and there are some drawbacks as well. But usually that's, you've got to get pretty good down the road, not just on your second deal. But, long-winded way to say there are other options on the smaller deals too. There are private lending partners that we use, but generally that comes with a premium on, the cost of those funds. And you trade that for the speed at which they could do. And a lot of times that's just based primarily on your personal financial position, not necessarily what as a commercial loan.
Okay, I have a good one here that I've heard many times. But if you use your house as collateral to get a loan and the business fails completely, what happens to me? Am I homeless?
Ooh.
Does the bank throw me out on the street?
Oh, we've got to say this again. I am not an attorney. Please seek your legal advice from your legal counsel. Great question, because we all know with these loans, a lot of times there's, we have to disclose, hey, you're probably going to have a lien against your house. Good news is, for most people, good news, bad news, so to speak. Most people have, their primary mortgage lender that's in what we call the first lien position. And all that means is they advance money for you on that home loan. So they're the first ones that are going to get paid. And so that lien that's usually behind it is what we're talking about here. Is, they have less options. And so, you get to a situation where, the business is not performing, you're going to basically close down. I will say this, SBA has more options compared to other lending options. And we saw a lot of that through COVID. And, that's really the nature of an SBA loan, is because of the protection, because of what's, required of that lender, they're going to be more apt to work with you on that. Now, let's say everything gets to the end where, they've liquidated everything in the business, and yet you still have that second lien. That doesn't necessarily mean it's going away, but, the fear of losing your home, as long as you're paying your first mortgage, the second lender doesn't have an option unless they, either pay off that note or buy that note from the first lien lender, which usually does not happen. So yeah, is it a risk? Absolutely. And we try to talk through folks with that. But, if you're paying somebody, on your loan, you're going to be okay. And so that's what we try to talk to through.
Great information. This one is from, I think I know who this one is too. Paul from Indiana. Paul asks, you have loan financing fees and have have loan financing fees that lenders charge increased or decreased lately, I guess, with all the craziness and what's going on. Things gone up and shot back down, or?
Yeah, well, thank you, Paul. To answer that, it depends on the type of loan. One of the cool things, Michael, is, you came to me 10 years ago and you were in the Air Force. This is your second career. You're a veteran. We could get your fees waived for your SBA loan. Well, I think it was 2016, excuse me, that was sunsetted. It was part of, a program with the SBA. So they brought back during COVID up to, they waived fees for loans during that COVID year, 2020. When we get to 2021, which was the SBA's fiscal year, it starts over October 1st every year. So fiscal year 2022, and they waived fees up to 500,000. Now we get to last year, or maybe it was the year before, I can't remember. Now they waived them up to 1 million. And so if you have $1 million loan or below, you have no SBA guarantee fee. So that's awesome for folks. And, that captures a lot of, the folks we work with in the franchise industry. But in general, what I can say to Paul in Indiana is the fees outside of SBA, they have gone up, and it's always a trade-off. If you want like in a private loan, if you want a lower rate, you're probably going to pay a higher fee up front. If you want a lower fee, that rate's probably going to be. So you're kind of trading dollars there. We are in a high rate environment, and nobody's ecstatic or excited about that, but that's generally what you see outside of SBA.
Great. Thanks, Paul from Indiana. All right, this is our last question. I can't believe time is flying. We're almost at half an hour. So our last question, and this is from Mitch from Omaha. How is SBA funding going to get a franchisor paid their franchise fee prior to the launch of their business or the license is received for the business? We're not seeing a pathway to this.
Always a good question from Mitch in Omaha. And Mitch, how you doing? I hope you're doing well. I think I know who that is.
He's asked you before.
It is such a tough question. So, one of the things with particularly an SBA loan is you have to be ready to operate that business as if, unless there's a construction element that we know is going to take a period of time to construct, then you'll open the business. One of the tough things for industries, either in healthcare, some of the service industries, we have some very particular laws here in Texas for air conditioning, HVAC servicers, is you have to have that license to be a operational business. Therefore, it is a requirement before you close your loan. Some of the ways we have worked with folks is to, kind of calculate the timing of that. And, sometimes there's things within the lending process we can do to speed up that we kind of talked about before. But it's a hard workaround. There's really not one when it comes to licensing, because if they don't have that license, they cannot generate revenue. They cannot be operational legally within the state, and it will be a requirement. Now, there are some where you get into, and this doesn't solve the startup problem, but in the, acquisition or transfer of ownership, to where, particularly in Texas, I'll use where, in my backyard, when I've worked in childcare facilities or healthcare facilities where that license has a period which you can operate under, the previous regime's license until you reach your inspection and approval. Other things we've done, and I think franchisors are really good at this, is, get in contact with that governing body. I know particularly TDAD's, Texas Department of Aging and Disability Services. Can't believe I got that right. If you know who the people are down there, or know, the contacts in the state, you can sometimes help to expedite that schedule for inspection or schedule for review. I know when we used to work, in senior care, we would make sure that they had their application in while we were still going through the due diligence process for their funding application. And so, they can get preliminary approval sometimes before, and so all they're waiting on is the inspection, which can, help speed up the process. But great question. I'm sorry, Mitch from Omaha, I don't have a great answer for you, but there are some practices there hopefully you can take away.
That's great. Well, Sam, that was unbelievable. What a wealth of knowledge you are. And thank you so much for sharing all of that information and just taking all of those questions, just spouting out the answers. It's pretty amazing. So how do people find you or get in touch with you if they want to contact you or Tenet?
Usually there's a signal that goes up that looks like a bat. No, tenetfinancialgroup.com. My email is my first initial S and then Phelps at tenetfinancialgroup.com. Shoot me an email. We have plenty of information on our website, Also, if you bump in Liane, Michael, they know how to reach me, and always happy to talk about this stuff. I think the biggest thing, you said answers. Sometimes there's, we don't know the answer right immediately, but we can work the problem. And, that I think that's the biggest thing is, get in touch with us. Let's communicate and let's figure out how we can start working the problem.
Amazing.
Love it. That's great. Oh my gosh, a wealth of information to say the least. You know what I learned today? I learned that if any of my Zor friends ask me questions, I'm just going to direct them to you because I'm like, I don't want to be answering any of these questions. No, but that really a great wealth of knowledge. Liane, hey, what did you learn, Liane?
I learned that financing is like Baskin Robbins, and I'm hungry and I want to go get ice cream.
What did I used to tell people? Is the glass half empty or is it half full? I don't care. I'm just thirsty.
Right.
Love it. Well, hey,
Thank you.
for all those out there, if you like what you heard, especially from Sam, please leave us a 5-star review. It helps us grow. And subscribe to us on Spotify and on YouTube. And are we on Apple, Liane, or anywhere else?
Soon.
Okay. Well, we'll see you in a couple of weeks with more unfiltered news, education from both sides of the border. In the meantime, what's on our final segment is called Franchise Mingle. Franchise Mingle is brought to you by the National Franchise Show. And the Franchise Mingle is a little bit about what's happening, what's coming up, events maybe. And of course, we have coming up very, very soon, the National Franchise Show in Orlando happening June 8th and 9th. Hey, if Sam gives a selfless plug, then I got to give myself a plug too. I'm just kidding. Coming up at the Orange County Convention Center. But on a serious note, yes, we do have a whole bunch of franchise shows coming up for the fall. Tampa, Philly, Atlanta, Jacksonville, Pasadena. We can help you obtain a lot of quality franchisee leads. And I think Sam will attest to that. Sam being a phenomenal, great client and vendor who exhibits at every single one of our shows, never skips a beat. But also we have a whole bunch of other things coming up in the fall as well. We have the IFA Advocacy Summit coming up in September, Springboard coming up in September. We have FBR's Operations Summit as well in October. And of course, our newly launched and announced, I think, what did we announced it a week ago or 2 weeks ago, Liane?
Something like that.
Let's Grow Canada. Let's Grow is coming to Canada. It's coming north of the border. Thankfully, the inaugural Let's Grow went very well south of the border. And so we've decided to bring it to Canada, and we're super excited about that.
Very good. This episode is brought to you by Tenet Financial, Franchise Assembly, the National Franchise Show, and Hello Mastermind. See you soon.
Thanks, guys.